Hello, Nick Fenton here with TickerTank.com. Today I'm going to answer an email question I received asking how much of my capital I generally have deployed in my portfolio. And that answer basically depends on the volatility environment and the overall market. I'm generally a premium seller, so I'm doing strategies like short strangles, short straddles, selling iron condors to open, naked puts, naked calls, ratio spreads, things like that. In general, when we're in a low volatility environment like we're in right now, I'll have about 60% of my net liquidity deployed. And the reason I only do 60% is because you gotta leave a little bit of a cushion for an increase in volatility causing an increase in your buying power effect, which in turn causes a decrease in your net liquidity, and therefore adjusts your overall capital deployment percentage of your portfolio. So in these low implied volatility environments, 60% of my capital in general is deployed. For that reason, and the fact that it's just a little bit more difficult to find the type of strategies that I like. It's more of a you have to really go out and seek them, and it's just a little more difficult to find them. We're in a higher implied volatility, or just a higher broad market volatility environment. It's much easier to find these positions, and you have less risk of a buying power effect adjustment. So generally, in that type of scenario, I will have around 80% of my capital deployed. Around 80% of my net liquidity of my portfolio will be actively positioned in a trade, a variety of trades. So I participate in strategic diversity, so I have a variety of different strategies going on. Underlying diversity, so a variety of different strategies and a variety of different underlyings. And 60% of capital deployed approximately in a lower broad-based volatility environment like we have here, and approximately 80% in a higher implied volatility market environment like we've seen in recent past. So what determines low volatility environment? What determines high volatility environment? So we're looking at a chart of the VIX here, and you can see 12 is essentially a really strong support level in the VIX. So generally I'll consider a low volatility environment anywhere from about 15 and below. So anywhere around 15 below, I'm looking at around 60% of capital deployed, approximately. Sometimes a little less, sometimes a little more if there's been a buying power adjustment. And then on the flip side, there's kind of a middle area between around 15 and 17 roughly, where I'm just kind of in the middle. Generally I'm sticking more closer to the 60% safe side, but I may bump it up to around 70. Generally don't exceed 70. And then once the VIX gets to 17 or higher, then it's just automatic that 80% of my capital is deployed in most cases, or more in most cases. But I do like to leave a little bit of a cushion at all times. I generally don't purposely have 100% of my capital deployed. It's generally 100% deployed because of buying power adjustments in existing naked option strategy positions. So that answers that question. Hopefully that was clear, and if you have any questions, feel free to leave it in the comment section.